So in this video, let's discuss how you look for trading areas. Now, you can learn to read a chart. A chart is like hieroglyphics. All of the candles on the chart actually mean something. Let me bring up a chart and show you. So let's get into some chart reading. So this market was going up. You can see we have white candles, and the white candles for me are up candles, and there was virtually no retracing. And then at the end we get this massive push, and you get a tiny wick on the top. The next candle completely reverses all the way down, and there's not even a little tail wick. Now this is an area where you would have liquidity, so you know pretty much that the market is going to come back and it's going to take that liquidity, because, well, that's what the market does. It drives itself by picking up liquidity. So a lot of traders would have seen that and thought that's a good area for selling. They would have sold that area maybe down here or down here, and they would have put their stop on the top. And then what happens? Well, we've got this candle here. So as it pushes up, it forms a large spike. Now, what does a spike actually mean? Well, the spike means that there were lots of buyers, but the buyers couldn't hold the price up. So that is your first sign of weakness. So we've taken out that area, taken that liquidity, but obviously the market makers were selling in there because you've got this big spike. So then the market continues to trade upwards, and you get another twin spike sitting there at the top. Now these two twin spikes are an area that people will see and they will think to themselves, oh, I can put my stop up there, it must be a strong level because it's spiked from that level. No, it's not a strong level, it's an area where there's going to be liquidity. And you can see on the next candle, everyone would have been thinking to themselves, oh well, that is strong, next candle's declined. And what happens? Well, the market makers go back to wipe up that liquidity, and you get this classic push up like that and a doji formation. Now that also creates liquidity above it, but they obviously had picked up enough liquidity by that stage, because the next candle after the doji was a big black down candle. And then what happens? Well, if I manage to pick up this little line properly and drag it down here, we've got virtually another twin spike here, just like we have at that top. Now usually you would expect them to take out that liquidity because it's a twin spike and that's where liquidity rests. But just a little bit further on we get the formation of a doji followed by a big down bar. Well, as I said, dojis create their own liquidity. So just above this doji there would have been liquidity just up there, and that is where they came back to. Come on chart, that's where they came back to there, just to wipe out that liquidity that was sitting there, because everyone would have seen that doji, thought this is a weak market, sell it, put my stop on the top, and that's it. And that's why they came back to that area precisely. Now they didn't take the twin spike liquidity, but they came really close. I mean, I would imagine that spread would have widened at that point and they would have at least taken out any stops up there. So that's a classic example of reading a price chart. So let's go over to a live chart now and see what's going on. Now this is a current chart of the DAX on the 1 hour chart, and we're going to start pulling this apart in the same way we pulled apart the other move. So what do we have going on? Well, we can see that the market pushed up very strongly from this point here. So that tells you straight away that this area must have been buyers. So I'm just going to mark that block, because this must have been a buying block just there. So what happened? Well, the market makers decided that they were going to hit that buying block again, and they took it out with this wick. Well, that tells you two things. It tells you that there are probably no more buyers in that area because they've knocked them out with that long wick. So now we know that this area is invalid. So where is the next block? The down candle that we can see that was previously a seller before the market was pushed up. So this black candle here was obviously where market makers were selling, and they were selling to buy. So if I mark that top of the body, bottom of the wick, you can see that's exactly where they push this market down to. Now, what are they going to do next? Well, we can apply the same logic that we did to the down candle before the up move. We want the up candle before the down move. So we're going to mark that white candle that you can see there, which is this one. So if I mark the top of the body, bottom of the wick, I must mark the bottom of the body and the top of the wick, just there. So that's a very high probability area that they're going to hit, because that's where they were last buyers, and the market makers were hitting those buyers to do what? To sell to them. So that is a key area for me. We've got that wick there. Will they take the wick? It's possible. They might have a go at it just to sweep out the liquidity that's there. But I wouldn't be buying at this area we are currently. I would be selling up here because we have this nice big decline, and it's possible that the DAX at least will make what I call an ABC structure, which is a push down like this, an A, and then it retraces in some fashion back to here, and then we get a further push to the downside. And that's very simple price projection. Will it do that? I've got no idea. It might, in which case I can start to look into these candles, the last black candles before this move up, which is this one here. So you can see how I'm building up a picture of this chart using just the candles, and that is quite nice, because this would be a superb area if we get a retracement up to there and then we get a pattern projection down to there. Everything would tie up very nicely. So this is how you can quickly analyze your chart, simply looking at the up candles before big moves. So up candle before a black candle, so you know that's your order block there. This was a push away from here, so you know that's your order block. Again, this one, big push away, you know it's your order block. And then we've got this one down at the bottom here. So if I just mark that like this. So those are the three levels that I would look at on the buy side, and I've just got one level on the sell side. So now I can put my liquidity map on this chart, and I'm looking for liquidity to show up in either that area up there or this area down there. I just wanted to put the liquidity map on the chart, and also a little bit of a warning for you. This is one broker where I'm doing my prop trading account, and you can see I marked the top of the body of that black candle, and it caught precisely that wick. Now when I look at my broker, the one that I actually trade my real account on, if I can get to it, you can see that if I go onto the hour chart, we've got the body of this candle here, and if I mark just the body, you can see that this candle doesn't touch it. Now, different brokers, different prices, and I wouldn't say that I would trust one broker. So in an example like this, even though I say top of the body, bottom of the wick, I think you could probably be forgiven for putting it on the top of the wick, especially if you've got something like a doji. Now if I go down onto a 5-minute chart, you'll see that the liquidity map gave an exceptionally clear signal. As you came down into this move, you got an orange liquidity bar followed by a red liquidity bar. Red is about 70% liquidity, and it's not 100%, aqua would be 100%, but a red one is still very good, and you would have been anticipating something like this. So as always, the way to enter this as a trade is to mark the body, the highest body, as it's a buy trade, and that would have been your entry after that red candle. You would have bought just in there. Now that's how to use the map, and I've gone on to the 5-minute chart. So I've gone from the hourly chart to the 5-minute chart, but you can see even on the 15-minute chart you had liquidity showing up here as well. So that's how you first of all have to mark your levels, and then you use the liquidity map to actually confirm, yes, liquidity is coming into those turns, and then you enter the market. Well, I hope you like this video, and it's made for some of our channel members who specifically requested that I actually give a little video on how I'm using the liquidity map.